Good afternoon, everyone. BC Richfield here, coming to you live from London. It is 3:10, and I have been live, or thought I was live, but only actually talking to myself for the last 10 minutes. So what we're going to do now is actually be live, and I'm going to go over everything I just went through because I've had a nice run through it. I did think the comments were a bit quiet, and I did think that something felt a little bit off. But yeah, my fault, guys, my bad. Apologies for being late. I'm going to go over the last 10 minutes of material that I've done off stream, back on stream, and then we're going to open things up to your questions. So big shout out to everybody that's watching this live. Again, apologies for the delay. Not a technical person aside from my trading, I'm afraid. All right. So, and also a big shout out to everybody that's going to be watching this on recording. So, as I was just saying, right, we've got Bitcoin here on a weekly scale. We've got nothing on there. We've got this support resistance level here, which I've left on, which is on a daily scale. Hey, everyone. Really, really appreciate all the likes and especially all the laughy faces. What an absolute pillock. So, technical things aside, right? And we can all have a good laugh about them later. What are we going to do today? So I want to take a look at Bitcoin. I want to look at the DXY and ES. Obviously, we've had the numbers come out today and we've got this whipsaw effect happening in the market. So we want to take a look at what we're going to do with that and also what we want to kind of plan in ready for the week ahead, right? And looking at how price goes. I'm not a massive fan. I don't trade a lot over the weekends. I normally wait for traditional trading hours, right? So I like using the weekends to really dive deep into the previous week in terms of my journaling, charts, what my analysis has been, and use that to kind of compound and then look at what we could have coming up for the week ahead, right? So on a weekly scale, what are we looking for? For me, I'm looking for the key SR. I'm always asking myself the question of where is price looking to move to, right? Where's it hunting liquidity? For me, this is all a liquidity game, right? When price gets acceptance at a certain level, it wants to push higher. It's searching for that liquidity that's up higher, that pool of liquidity that can fuel the bigger moves, right? The same if price is pushing down lower. If we lose a key level or we deviate, we reject from a key level, then I'm asking myself, okay, where is price looking for liquidity, right? Think of it like fuel, okay? So giving that example and using this on a weekly scale, what we can see here, the key levels for me are here, okay, and then here. So why are these levels? Now, what we can see here, support, once we tag this level here, price has this nice, healthy move to the upside, right? Then when we tag these levels here, we then get this move back down to here. So this is what I'm talking about in terms of liquidity, guys, all right? Price is driving up into a certain level, working out, are there enough buyers here to then fuel and move further up? Or are we offloading here? Price is starting to weaken, and then we're getting this big sell-off, right? So price comes up, finds resistance here, tries to get above, closes below, comes up here. Now this here, which we've got here as a deviation above the highs or a fake out, this was really sneaky, right? So we get these marginal closes above this level, right? But what you could say to yourself as well is, okay, well, that's the key high at that point, so we haven't closed above them. But this is the deviation, and we can see then when price fails to find acceptance above this level, we have this really, really big sell-off to the downside. And ultimately, where does price go? It goes to search for the liquidity down on the lows, which is under these lows here. So what have we done now that we're down here? We took a tiny little wick, which you can just see under there, and then price had this big impulsive move to the upside. Now, this was a really, really good sign for the bulls because it shows that there's a lot of buying pressure under there. Now, something you've always got to factor in here as well is it's not just necessarily all buy orders here. What you're going to have is you're going to have a lot of people taking profit that have been short up here or here into this level. But that all combines to cause this bullish impulse move up higher. Now, what it managed to do was, again, drive up here, take out these highs, took the liquidity here, took the stops, right, fueled a move back down to the downside. And now you can see you get this ping pong of liquidity, up to liquidity, back down. More liquidity taken here under these lows here and anything else that's remaining down here, which has then fueled the move back with inside the range. So if we're looking at this as, say, our range high, that is our range low, then if we look at this level almost like our kind of midline, yeah, if we trace this back, you can see where you get confluence from this level as well. So look, we get resistance, resistance doesn't close above. Then when we do close above it, right, it's signaling to us the price is ready to move a little bit higher, all right? Then when it dips back in, takes out liquidity, fuels for the heights, we can see by this type of spinning top, if you like, this candle here is an indecisive one, right? Because it's pushed higher, rejected, low, rejected. We're left with the volume of the body here in the middle. Now, there's something that the legendary SC always says about that: small body candles lead to big body candles, right? So we're looking at the volume is within the body of the candle. So what does that all mean for where we are now? Well, we can clearly see we've run these lows down here. And what is more bullish than bearish is the fact that we're back with inside this range. Yes, we took out these highs, again, had this sell-off. Looks like we've done something similar here. Now when we switch down to a daily scale, right, what we can see along here is price has come up, taken out these highs, come into our key SR level here, which is for me a key SR level for the same reasons I was describing before. I'm looking for confluent reasons as to why this makes sense, right? So we set this high here, in itself isn't significant, right? Then when we start getting these rejections here, this is telling me something, right? Price has tried to get up, sells off, tried to get up, sells off, up, sells off, up, sells off, all right? Then when we get this big impulse move up here, which once again, guys, if we take a look at the lows here, we can see we've run this key weekly level. What else have we run? We've also run this. Price has fueled up. We get our beautiful bullish divergence here on the B Pro, which I'm going to run through with you again in a second, how you can use the B Pro and divergences just with key SR levels to get yourself into high probability trade setups. But we get all of these factors come in, and then that's it. It's screaming at you that if this thing is going to move, then it's going to move here, all right? Something else I like to do is use the RSI. And for the RSI mainly, and especially on sort of the 4 hour and down onto the lower time frames, what I want to see is price in oversold, right? I want to see price oversold. We get the divergence, yeah. Oversold is telling me that there's room to the upside, right? So if we're going to get that momentum shift, that's what we're going to do. Same way as if I'm looking to short something, I want to see the RSI up in overbought ideally, all right? Now, again, whenever we're looking at divergences, RSI, bits and pieces like that, for me, the higher the time frame, or not for me, factually, the higher the time frame, the more weight that we give to the information that we're receiving, right? So make sure when you're going into trading, when you're looking at things, don't get caught up on lower time frame trades, charts, all the time, because you'll see the price moving, it will swing here, it will swing there. Very, very easy to lose that sight of the overall macro picture, all right? So we came in here, we took this liquidity, we had this big impulse move to the upside. Now, one of the issue with these big moves, as we can see here, right? These, and you say, call it what you want. You say the inefficiency here, yeah. So we can see that down here. Kind of got something similar going on here, which was making me think if we can get above these highs here, that we could have a really fast move up, right? To take that out, just because there's not a lot of price action, there's not a lot of trading that's taken place in that area, right? So we can expect a faster move. Again, nothing in trading is certain. What we're doing is we're trying to turn it in a way that the probabilities are in our favor, right? And we do that by using the information that's in front of us. So what have we got here? We've got our RSI, which is helping us gauge momentum. We've got the B Pro that we're using for the divergences, right? And we've got our key SR levels. So how does that affect us? How do we plug this all in and turn this into a trading strategy, or just in terms of using it for information, right? So what I'm looking at here is we've got our key levels, right? We've got this high here. Price comes into this high. We see these long upside wicks showing that there's a lot of sell pressure. We get our divergence, yeah? We move on to our lower time frames. When we break back in, when we get this retest here, right, then what we're saying to ourselves is, okay, if the high probability trade to the downside is on, where is it likely to go to? So I would be looking at this area here, right, for the consolidation. So you're saying, okay, if price is going to drive down into here, this is where we're going to come. And then below these lows here, all right? Now, we didn't quite reach those lows, which is fine because we would have got a really, really nice set of trades in going down to tag those. But the key thing for me here is how we're getting into these high probability setups. We've set all these levels before, so this one doesn't count, right? Because obviously this one is where the level's set, yeah? But this one does, and certainly these ones down here. So if we allow ourselves to think of it in this way, if we're taking our high time frame levels, we're waiting for price to come in and interact with those levels, and then we're looking for our set of triggers, right? So for me, I want to see price run into a key support or resistance. I want to see how it reacts there. In my mind, it's either going to deviate, come back within the range, in which case we then head for the following side, or we're going to close outside, hold outside, start building that structure on the lower timeframes, in which case we expect continuation. So if we just take a look at this, and we're just going to pop some arrows on here, right? Let's make these blue. So the reason, obviously, that I'm popping these on the following candle, not on the candle that the actual divergence is on, is because that's not confirmed until that candle's closed, right? So we don't want to cherry pick anything, because if price had continued to go up there, it would invalidate that, okay? And then let's just look at a couple of bullish examples. In fact, let's mark this one, right? Because we want to discuss why we wouldn't have taken this one, yet why we would have taken these, yeah? And let's be nice and consistent and keep these in blue. And if you've got any questions about this, guys, as we're going through, please don't hesitate to pop them in the chat. Or if I'm rambling on too quickly, please do tell me to slow down. So this is why we're here. And actually, I want to mark this one up as well. So we've got our weekly levels. We've gone onto our daily chart. We're building our daily bias, right? Now, for me, what I'm saying is once I've got this confirmation here, right? We're focusing on these ones actually because we're not going to count that, because we wouldn't have had a level to run at that point. This is what set the level. So when we've taken this on a high time frame, then what we can do is we can move on to a lower time frame and then look for triggers, all right? And just to run through this level here, which is the key SR, you know, same principles as we did on the weekly, guys, all right? Resistance, 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 smash above it, this big fast impulse move up, doesn't hold, excuse me, we simply deviate this level here, close back below, and the speed that we go up in, we come down just as fast. Then we close under this level here, in which case we're saying to ourselves, okay, if price can't get acceptance back above this level, where is it now hunting for liquidity? Below these lows, all right, below these lows. So now we're asking ourselves a similar question here, right? Where is price going here? And one area that I'm certainly going to have a lot of interest in is going to be these untapped lows down here as we're making our overall journey down. Now, is there any guarantee that we don't just flip reverse here and go to the moon? Absolutely not, right? But again, all we can do is trade what's in front of us, and it's important that we're consistent. So I hope that all makes sense. We're now going to drop down onto our 4-hour time scale, and I'm going to show you guys how I would be looking to take entries on here, right? So for me, confluence is very, very important. And like we said above, the plan always remains the same across the different time frames. We've got our divergences, right? We've got our key levels that have been run. So now we're saying to ourselves, okay, we don't need to worry about what our high time frame bias is now. We know what our high time frame bias is. So let's look at it like this. We just want confluence to be continuing through with our thoughts, right? So let's use the RSI as the first example, right? And we'll start at the beginning. So this one here, we could have taken this trade. What would have put me off of taking this trade, or why I didn't take this trade, sorry, is because we had a very, very clear weekly level down here. Price was selling off quite aggressively. We hadn't really gone into any kind of key consolidation at this point. It felt like we were going to get this kind of consolidation here before price decided if it was going to move higher, or ultimately, and the high probability move was back to the downside, again in the search for liquidity underneath our key high time frame levels. So what did make me curious about taking this trade, though, is the rest of it lined up really well. Daily divergence, 4-hour divergence, RSI down in oversold, all of those things are telling us that the momentum could easily shift, and the room, excuse me, and the room is to the upside, all right? So pumping here, flying up, taking out these levels, yeah? Now, I didn't take this trade, right? It just, for me, the setup wasn't really that clean. And also, it just felt like, you know, price was going to come back down to here. We were in a key sell-off. There's a lot of bearish pressure, and we'll cover this shortly. But the DXY as well was obviously incredibly bullish. So all of that leads to the idea that there's more downside. However, if we had wanted to trade that, we could have definitely scalped that up to these levels, right? Now, let me run through that again, just so that everyone's really, really clear. What we're doing across all the time frames, we're finding our high time frame bias along with our high time frame levels. We're using really, really simple support resistance levels or looking for liquidity, right? Finding out, working out in our mind, where's price going to run? If it fails to get acceptance below here for further downside, where's our upside targets? Well, we've got this key level here, and we can see it's key, right? Because of how it's held price. And also as well, guys, move to the higher time frames, right? Because a lot of this noise, I work with a lot of people and they're like, should I put my SR level here? Do I put it here? Do I put it through the bodies of the candles? Do I allow for the wicks? Now, first of all, there's no exact right or wrong with that, right? The key is it's like drawing a diagonal, yeah? Now, for me, the key is consistency, yeah? So if you're drawing your diagonals and you're taking them only through the wicks, yeah? So if we were using this example here, and we were trying to work out a good breakout level, allowing for this wick, then if we're using wick to wick, then it's important that we stay consistent with that, right? The other way is to do it like this, right? Where you have your anchor point, and then you can go through as many of the wicks as you like, but not through the bodies. Now that only applies, right, when you're taking the line here, all right? Because obviously what you want to allow for are things like deviations, right? So let's say we applied that principle here when price action was back here, and we see this breakout, right? Now we're saying to ourselves here, okay, do we just play the breakout blind? I don't think so. I mean, it's certainly nothing that I would want to do. And also we're near to this key resistance level, right? So what do? Well, we monitor price here. We can see on the RSI, we're up in around the 50 line, a little bit indecisive, right? Price can go and hold above and push higher, or ultimately drop below, which it did. But again, if we look at this in terms of liquidity, we can make life a little bit easier for ourselves, yeah? Because this is the high that we set on the breakout, yeah? So we've set that high on the breakout. Now I think what we're saying to ourselves is, okay, well, if we can get and close above this high, then we're probably going to make a move into these highs here. And it gives us an opportunity to scalp that on a lower time frame. However, we get this big rejection here, right? This then forms our inside bar pattern. We get a nice bullish engulfing here, but then ultimately a doji before price starts breaking down. Now, before we have that big drop candle, right, let's look at the information we've got. We've got low, lower high, right, price coming in, looking a bit bearish, continuing this bearish momentum to the downside. We've had a deviation or a fake out above this sloped resistance here, this diagonal. Then price has come up, taken liquidity above these levels. These are people that have either gone long too early, right? Or not necessarily too early, but breakout traders that are in here. But people that have also shorted here have got their stop losses here, right? Now, remember, when you open a short position, your stop loss is a buy order, right? For everything that has for markets to work, there has to be buyers, has to be sellers, right? So when those orders go in there, right, then price rips up into here, takes out those stops, right, which creates this bundle of liquidity for then price to get short, and then you have these big impulsive moves to the downside, right? So run liquidity, close back within, and then we say to ourselves, right, well, the high probability set up now, and as we see on this candle before the big drop, we can see the RSI has now come back down below the 50 line. We've got our bearish divergence up here. Our high probability setup is to the downside, all right? But I digress. The key things that I'm looking for happen at the extremities of the range or the SR level, all right? And what I mean by that is here, right? These are the levels we've marked out in high time frame. This is where we're getting super interested, right? I want to see price run these levels, take the liquidity. We want our divergence, right? We then want to see some bullish momentum here, and then price can push up further. So what would have been a good entry here? And it depends on your entry technique, all right? If you're someone that likes to trade candles and candle patterns, which I really, really like on higher time frames, then you'd be waiting for this, right? You've got a bullish engulfing candle here. Let me zoom in for you. We've got our high time frame confidence. We see price moving up. We see this small consolidation here, which is perfect. RSI momentum's to the upside. We see this bullish engulfing candle, gives us the opportunity to go long here. Where else do we get the opportunity? On this lovely bullish hammer candle here as well, all right? Again, you can break it down onto the lower time frames as well and look for your patterns. So if you're coming up to a level, for example, and then what you'd ideally want to see for a long trade is price come into that level, run that level, get back above it, retest that breakdown, and that's where you're looking to enter, right? The high that sweeps the low, wait for price to get above. You can market enter here, or what I prefer to do is wait for the pullback to this level. Again, not something you always get, but the whole idea of trading consistently is that your strategy pays off over time. Right, there's a massive misconception that I see on social media and that Twitter and stuff with people that want to jump on a trader's back the first moment they hit a losing trade, yet almost seem to think that it's expected to win all the time. Right, it doesn't. You know, look at some legendary traders out there, some algo guys. Look at Pedma7. If you get a chance to check him out, one of our brothers over at the Nest builds these amazing algorithmic trading systems, and one of those has, you know, returned sort of 500% on your money over 10 years with a win rate that's under 30%, right? So it's not necessarily all about the high win rate. It's about knowing your risk, right, and knowing your reward. A couple of questions here, guys. Let me just have a really quick read through the chat before we move on with this. Jojo, do you use gap fills for confluence? Yeah, it's something that it's definitely something that I factor in. But there's some incredible traders out there that trade those gap fills. It's, for me, actually what I'm doing, I'll show you this on the lower time frames. I'm waiting for price to run a level to form a base, which I call like a breaker, and then, or a breaker box. I'm then looking for price to get acceptance over that level or under it if we're shorting. And then I'm just looking for a really, really simple pattern that I'll share with you all as to what I want to see price do. All right. But I need to think about it more. I was reading something the other day about traders that trade the gap fills. And there was a guy who was really, really impressive, fantastic teacher. If I think about him, I will. I'll pop his name in the chat at the end. So do keep the questions coming, guys. If you've got any, just smash them in the chat. Yeah, it's always good to share information, and to be honest, you know, communicate with people, engage with people more. The networking side of things, find really good people in this space, and they can help you so much. All right. So before I digress too much, we've got our daily divergence here, yeah, which is marked by the blue arrow. We've now got confluence from our 4-hour divergence. We've got the RSI down in oversold, and we've run a key weekly level. I can't think of any other reason to not be long here, right? So that's what I'm looking for there. When we run the highs, it's exactly the same thing, all right? Now, obviously, this candle here wouldn't have given us much chance to get in on a 4-hour scale. However, the theory is the same. When we look at the RSI here, I mean, look at this jumble of built up bearish divergences, right? Yes, we get a couple of hidden bullish divergences in here, but like I say, that's the nature of it when you've got this kind of choppy price action and an RSI that's coded by what I can only describe myself as a rank amateur. And actually, I didn't even do the majority of the coding. The coding is actually really, really sick. It's my messing about and messing about with it. But this, if you're interested, is done by a gentleman called Fikira on TradingView. He's an absolute legend, really, really nice guy, builds some unbelievable indicators. No affiliation with us at all, but he deserves a shout out for all the work he puts into things like this, I think. So do go and check him out. So same thing here, right? Let's just look at how many trade setups we got here, right? This one, we'll do this in purple. Everyone knows I like a purple arrow. This one, so this one's on top of each other here. Run a key level, daily divergence. This, we've got the 4-hour divergence here. We get our daily divergence here. What else do? We come back into this key level here, but this is the one that I'd be really interested in because of running this, yeah? Now, on the short selling side, this one absolutely stands out a country mile, yeah? Now, again, don't cherry pick these guys. Remember that when you get the divergence, it's the following candle that starts because you need to wait for the close, all right? So here we go. Why is this one so exciting, right? And I'm literally jumping out of bed for things like this, right? I remember this as we came up to this. The divergence kicked in here, I think about 5 a.m., then it shifted to here and here before we got confirmation. Because we're running this key SR level, look at the interactions we've had with it, right? We discussed it on the higher time frame. The more we move down through the time frames, the more we get a closer idea of how price interacts with it, right? So we push up into here and we run this level. We get our divergence, right? We can pop onto lower time frames. What's our RSI doing? It's up in overbought. It's now starting to come back down. Our high probability trade setup is back to these lows, yeah? And you would, by the way, guys, if I'm not zooming in enough on the chart, which I know I'm a pain in the backside for, do please tell me. So yeah, we'd obviously target these lows again, but the thing, we'd be really conscious, or I'd certainly be really conscious of this as well, yeah? Because the liquidity that's resting under here, again, you know, stops, breakout trades, etc. We're not sure why you'd want to breakout trade into a key weekly level, but people see the charts very differently, right? But this area here gives us confluence, yeah? And then when we drop down into this, we've hit a beautiful short. Well, let's make some money the other way as well, right? We get our divergence again, right? Closes in here, perfect, gives us an opportunity on the lower time frames to go up. The other thing as well that is always of interest are candle patterns, right? So this makes our, let me do this in a different color. Actually, I'll just delete this. This makes our inside bar pattern here, guys, right? So for those of you that don't know, inside bar pattern is when we get a mother bar, which is this candle here. Now, when you get this large candle, what you require for the pattern to become valid is the second candle to close within the range of this candle, right? Then once that candle's closed, you get an inside bar. What do we do when trading an inside bar? Well, we treat it like a range. An inside bar means that the market's slowing. There's a little bit of indecision before it makes its next move, right? So when we trade that in principle, what we're waiting for is we're waiting for one side to get run. It comes back within the range. We target the far side of the range, right? Same with this. When we run the highs here, what happens? We close healthily outside the highs, retest it, yeah? And then price moves up higher, yeah? We do dip right back down into this for liquidity, but ultimately price goes on to find our upside target over here, okay? So do remember, if you are someone that's trading the higher time frame, do consider the candle patterns, all right? So for me, the main ones I'm looking at are inside bar patterns, bullish engulfing, and sort of pin bar candles, which are like your hammers and stuff like that, right? So there's always significance to them, certainly in my opinion. Look, bearish engulfing candle after this run at key support, big sell-off, all right? Then you've got things like here. You have this inside bar pattern, breaks to the upside, comes down, retests the range here before we then move up. Another bullish engulfing candle here before we go to the highs, right? Now, don't just jump in and message me all really aggy when you just see a candle and then decide to trade it. You've got a bearish engulfing candle here, right? But price just doesn't go down. You still need your confluence, right? Make sure you're looking for your levels. Bearish engulfing, sell off down here, all right? Bearish engulfing, sell off, bearish engulfing, sell off, all right? So make sure you're taking into consideration levels as well, all right? So that's where we are with this. Now, obviously, we've had the numbers come out today, which has caused a bit of whipsawing. Price went up a little bit, front run it to begin with, then it's kind of dropped right off, based heavily kind of on the employment figures and bits and pieces like that. However, for me, it still doesn't change why we would take a short trade up here. Now, what we can see here is we've got a bullish divergence building, right? This won't confirm for another 1 hour, 22 minutes, all right? So if we go there and then we put off. Quick question here from Conti. So again, if everyone would go short, prices go higher. What if everyone closes their shorts? Sorry, mate, I'm not sure what you mean. So if we're talking about it in terms of liquidity, it can seem a little bit counterintuitive, right? Because for people that are short here, yeah, then this creates their stop losses above here that are buy orders, yeah? So let's do that in green. So what happens when price goes into that area is you would intuitively think, well, okay, if we're pushing up to where there's loads and loads of buy orders, then price is going to continue higher. And that can absolutely be the case, right? If you get that kind of balance. However, the reason that we're targeting liquidity like this and these buy orders is because whether you hear institutional buying, smart money, you know, it's really, really simple. And it sounds ridiculous to even say it, but they want to buy low and they want to sell high, right? So they'll have their key levels. Now, when people are trading, and if you're throwing, 50 quid or $50 at the market or $500 or $500,000 into a trade, right? It's nothing compared to institutional money, right? In the billions, high millions and billions, right? So to get these orders filled, they need to create a lot of liquidity, right? So if they want to sell, so they're sellers up here, and they want to sell, what do they need? They need buy orders. So they need to create the other side of the market, right? So when price runs up into those, all those buy orders up there, they're like, thank you very much. I'm going to fill all your buy orders with my sell orders. And then you get these huge, sometimes really aggressive moves to the downside. All right. Yeah, I mean, Jojo makes good, but they have more cash than we do. I mean, they have infinitely more cash than we do, right? Whether you believe the markets are manipulated, whether you believe it's general psychology, motion, whatever, it doesn't, that's for you to decide, right? But when you look at it from a technical standpoint, whether you think that this is just a magic box that exists on a screen, right? No one's here to argue with you on that front. I personally think that it's institutions moving money around, price getting pushed to key areas that buy orders or sell orders want to get filled on an institutional level. Either that, or it's the psychology of how markets work, the psychology of how people work. Yeah. And Jojo, another good point there, order flow as well. All right. So constantly, I hope that answers your question, mate. I'm really, really sorry if it doesn't, or if I've missed the point, but do feel free to ping it back in the chat if it does. And then, yeah, exactly. What if everyone closes their short? Well, think about it like this. Yeah, if everybody's short and everybody starts to close, the only way you can close your short is by selling long, right? So again, that's then going to create that expensive move to the upside, right? And by everyone, I would include institutions in that as well, because if everyone is retail and retail all offload their short positions, the chances are you're offloading those into the buy orders of institutions, right? And that's when you get that counter trading effect. So let's just take a very quick look at this on a lower time frame. Then I'm going to flip us over onto the 15-minute chart, and then we're going to take a look at DXY. All right. So again, any questions, guys, do pump them in the chat. So let's move down on here, and I want to take a look at this recent trade up here and show you exactly how we would trade this. So here's our daily level. Remember this was the exact close of our daily bearish divergence here on the B Pro, right? Now, I get often asked, I often get asked by either mentoring students or by people on Twitter, bits and pieces like that, in terms of holding this high time frame bias whilst you're on low time frame charts, right? Because it's very easy to get disconnected. Consti, you're very welcome, mate. It's very, very easy to get disconnected, right? So I will do it. I'll just pop an arrow on the chart, right? There's my key thing. But something that I used to do a lot years and years ago was just this. Just get a vertical line on the chart, right? Just make it a nice bright color, make it as thick or as thin as you want, and there's your thing. So you're saying to yourself, no, you're not even considering long trades here. You're not, right? Yeah, there were some scalp longs around here, right? The legend trader Dank, don't know if you guys follow him, absolutely student of SC, absolute master of TA. Get on, follow that guy. He's an absolute legend. We were talking about it yesterday, scalping some long positions, right? Because running into these levels, but you're scalp trading reversal where you've got a lot of confidence, right? The truth of the matter is you don't want to fight the trend. The trend is our friend until the end, right? The trend is our friend until the end. Find your high time frame trend, yeah, and then find your triggers. What are the triggers for me? So I love to see a liquidity sweep. I want to see that sweep then close below the low that took the high. And I like a very, very cheeky divergence here as well. Morningstar here from the DCC. Legend. That is awesome. The country club, the legendary people over there with Dank. So, yeah, guys, here we go. High time frame bias. We've drawn our vert on the screen to give us that. Now we've come down. What are we looking for? My entry is here, right? And I would execute this on lower time frames, all right? But I'm very aware people don't always have the opportunity, right? Lower time frame trading requires a lot of time behind the charts, right? So you can do this. Price is fractal, right? You just need to get your risk to reward right, and you just need to plug in your high time frame bias. So for anybody just seen a big spike in people coming onto the live stream, for anybody that's here, we've taken our high time frame bias, which is our blue arrow, yeah, which is bearish, which is a bearish divergence that we picked up on our B Pro. We've got this red line, which signifies that we're only looking for short trades here, all right? What we're then doing is we're waiting for a level to get run. So we've got a key high here. We've got our key high. This has been run. So what gives us confirmation, yeah? What gives us confirmation that this is ready to go down? Well, this is the low that took the high, right? I'm going to bring this all the way across to here for a reason, okay? And what we can see is price sells off here, off the back of our divergence. Now, why divergence is important? Because for me, that they're showing us when there's that imbalance from what the charts are showing us and what the momentum is doing. Yeah, the relative strength, right? So we've got our divergence here, which is saying, okay, look, price action's going up, but the strength is going down here. The momentum's going down. So we could be in a position of imbalance to the downside. So we just want to make sure we can confirm that, right? Take our divergence, price now. We wait for the close below. You can then market enter here if you want to. Or for me, what I do is I wait for the pullback to what I call the breaker line. All right. So for me, my limit order is on here, my stops are above here, and then my first target is these lows down here, right? Now, why those lows? Because if we're coming into here, they're not quite equal lows, but almost. What it's telling me is that there's liquidity still there was liquidity here that this tapped. So there's probably liquidity, there's probably buy orders under here as well. So this would be our first point. Now, I'm a very risk averse trader, and what I would do in this situation and why I've extended this line back across here is because what I'm going to do here is I'm going to take profit heavily here, and I'm going to move my stops to entry. Yeah. So always remember to consider your risk to reward. For me, my first target, or my key first target, has to be a minimum of a 1-to-1, and ideally, in truth, 1.5. You have to consider fees, especially if you're doing these on the low time frame, guys. You can easily rack up positions that are in the tens, hundreds of thousands in terms of position size. You have to be thinking about your fees then. All right. Now on this time frame, it's fine because we've got we've got a very reasonable percentage, right? But it's not a massive trade, yeah. But we've got a decent risk to reward. So price comes in, comes down, tags our level, has a nice big sell-off into this levels. We can get out of the trade, or if you've got some diamond hands about you can stay in the trade. But what I would then look to do is I'm taking like 80% of my position off here, right? So I'm closing out. I've got a really nice win. I've got my stops at entry. So again, I can't lose anything more on the trade. Then what happens? Price comes out, tags this. Loads of people say to me, man, why did you get out there? Like, what was the point of getting out there? You could have just stayed in here. And then, price has now really, really dropped. Yeah, no problem. But then why not just get back in here, right? Same principle, exactly what we're looking for, yeah? So we've come in. What have we done this time? We've taken out these highs. Where's the low that took out those highs? Yeah, down here. Right. Now, sure, by the time we got that, we didn't get the retest. No problem. I've got absolutely no problem missing out on these kind of trades. There will always be opportunities, right? But the key for me is consistency. So this would have given us our second opportunity to the downside, and if you're popping this back and you just hammer down the time frames, right, what you'll notice is you very, very often get these retests, okay? So even after this big sell-off, here's our close. Price runs back where to our breaker line. And we sell off back down to the lows, all right? Now, in terms of looking to manage this trade or to get out of this trade, a couple of things that you can use. What you would do is you would just look at simple market structure, lower lows, lower highs. Then when we get up to here, we set this low, we come up, set this high, higher low. Where's the break that we're interested in is this high, yeah? Price comes up, breaks above that high. You can either look to close the position out entirely, or you can take a heavy amount of profit, whatever you're comfortable doing. Once again, when we've got the confluence with us, we can then go again. Thumbs up from Ed. Hey, Ed, thanks for dropping by. Jojo, I got greedy. Yeah, I mean, it happens to us all, mate. It does happen to us all. We get those dollar signs come up in the eyes, and then, from there, everything is history, right? The other thing you can do is look at your RSI. Down here, deep in oversold again, moving up, moving up, moving up. What would we want to see for the continuation to the downside? RSI to get up here. Yeah, up into overbought and then start to break down. What would we want to see from here? Well, actually, those highs there getting run. Yeah, price coming up, doing something like this, coming back down, retest. Where would we then target? Targets underneath these lows, yeah? That's how we would look to scalp this, but obviously with better lines than those. All right, guys? So I hope that makes sense. Wanted to give you kind of a little bit of an overview of how I see the market. I know you guys are used to listening to Bird, who, is an absolute legend for a lot of reasons, but CMT level 3, not many more knowledgeable people that I've ever discussed charts and trading with. So, I feel very humbled to be here in his stead. I know I've got a different way of seeing the markets and trading, so hopefully it's something that's been of interest to you guys. I'm going to close off. If you guys have got any alt requests, please do let me know. I want to close off by looking at the DXY. All right, so for any of you that maybe follow me on Twitter or maybe don't, if anyone's interested, it's BC_Richfield. Okay, you can come and find me on there. I share charts and my thoughts every day on there. And yeah, again, look, for me, I'm using the DXY as an indication for risk appetite, right? when the DXY, the dollar index, by the way, when that's running hot, it's normally terrible news for risk, right? So this big downtrend we've been in recently is no secret that we've seen this really, really pump. People have been trying to call the top on the DXY for ages. The truth is that there's a lot of macroeconomic factors, geopolitical factors as well that are going into the fueling of this because it's the world's reserve currency, right? But think of it like this is like a flight to safety, right? When people are investing in these, when this is pumping and pumping and pumping, it's normally bad news for risk, right? And again, when we just had this little recent resurgence, look, DXY shows weakness, Bitcoin shows strength. Now we've got the DXY showing strength, Bitcoin has been showing weakness, all right, because it is, until it decouples, it is very much a risk asset. So what are we looking for here? Now, this was my magic dotted line. Absolutely nothing magic about it at all, but a little shout out to my good friend and fellow Nest brother, Julian, who's a fantastic fundamental analyst, but also a very good price action trader. But for you guys that know the difference between fundamentalists and us simple price action guys, it's it's a good bit of banter. But anyway, support, lose it, retest it, sell off. Try to get above it, take the stops, lower, try to get above it again, liquidity, sells off. All right. Now you don't trade the DXY directly, right? You use it. You would use it, for example, if it was showing strength to short the dollar euro, right? Yeah, the euro dollar, right? So that's what you would use it for. But it works in the same way. The principles, it certainly helps me to keep that kind of mindset. So that's why I've been saying that I really want to see this hold, right? Because the more that this holds, and if price then starts to come back down, what we want to see is we've run that level, right? Now we really want to see price accept the rejection from here, start taking out some of these levels to the downside, in which case we are going to see some nice upside for risk, all right? What we don't want to see is the opposite. We don't want to see the dollar get above this level here, yeah, and then start pumping higher, because then that's going to be bad news for risk, all right? The other thing before I let you guys go that I think is always worth keeping an eye on is ES, and I look at the NASDAQ as well. Now I'm using mini futures here, so it just means it's just a smaller contract size. And yeah, you'll see a lot of other traders using it as well because it's confluence for risk assets, right? So again, look, you compare this to Bitcoin, and these things don't often work amazingly well. But you can use these to overlay onto different charts. And again, look at the correlation, look at the similarities, right? This up leg here for Bitcoin, this up leg here for ES, this topping pattern here for ES and on Bitcoin, and both are now selling off, all right? So that's what I'm mainly using that for. I'm saying to myself, okay, what is ES doing? Because traditional markets, the money that's going into traditional markets, they're often going to dictate what's going to happen to crypto, all right, which is obviously a key risk asset. So what would I like to see here? What I want to see here is something like this. We've got our RSI here, yeah? So I'd like to see this push down into oversold before starting to come back up, yeah? Then I'd like to see price do something similar where we come into this level here, run it, come back above, retest, in which case then we're coming up, target 1, and then we're targeting this level here, which is confluent with these highs over here, which we believe there's liquidity. So we would then look for price to move up to there. This would be our entry. We'd wait for confirmation above this level, wait for price to consolidate a little bit on the lower time frames, find comfort here, and then again, this would be our breaker line that we would look to retest. What else might happen? I can see us getting a deeper correction. Again, these are all bullish theories, right? We can see us getting a deeper correction into here, in which case we might get something more like this. Yeah, in which case, obviously, what we want to be aware of then is this level here. We can scalp shorts up into here as long as we've got a reasonable risk to reward. And then once we're back in here, yeah, back in this range as such, then we trade it. God, that's awful. Then we trade it like a range, yeah? So if this comes down, if this is our deviation, get into the range here, yeah? We can see we try and get out of it, don't retest it, sell off. What happens down here? Deviate here, close within, but then we take out these highs, right, before we then sell off further. But then once we've deviated down here, we've come back in. We've had this nice sell up. We don't quite get up to the highs, right? But again, with any range trading, what you're doing is you always want to edge a 50 line, right? So just get yourself a basic fib. And all you need to do is this. just add a 0, 0.25, 0.5, 0.75, and a 1. And that gives you a nice range fib. You can then draw that out across, yeah? And then you're saying to yourself, your first target's always going to be that 50 line. You're always going to be aware of whatever happens there. Joan J, dead cat trap. Yeah, absolutely could be, right? And again, that's why we don't know. So we don't want to hold these biases, right? We want to take our high time frame bias, then we want to wait for confirmations on the lower time frames so that it directs us as to what's going to happen. All right, it directs us towards it. So, guys, with that in mind, I wish you all a fantastic weekend, right? Take some time to chill with the family, spend some time, make sure you're rejuvenating yourself, you're getting your energy levels up. That's brilliant. Numbers just dropped massively when I wished everyone a good weekend. I love you people. But yeah, it's been a real pleasure covering for Burb. I hope I've done a palatable job. I know you can't, I know we can't replace the legend himself, but he's out doing amazing things for the Nest and for the community, as he always does. He'll be back as normal next week, but if I do get the opportunity to tune back in with you guys, it would be a real pleasure. Also, if you are interested in knowing more, I'm sure our legendary team over at the Bird Nest have put some bits and pieces in the description here on YouTube, so you can dive into there. Or if not, just drop me a message. Come and tag me over on Discord. Come and grab me on Twitter. I'll throw you out some free trials for the Nest. You can come along, see what it's like, see as a community what we're doing, what we're building, and why we're progressing compared to the market. We've got a great team of traders, we've got a fantastic community, we're all dedicated to learning, and we really want to make sure that people have this opportunity to gain their financial freedom. Not too long ago I was stuck in a real dead-end job, hating life, working all the hours God sent, not really getting anywhere, just treading water, and I dedicated myself to refining my knowledge of trading. I found the niche that really spoke to me. I dived really, really deep into that niche. I learned excessively hard, right? Just commit to it, guys. I promise you, if you just work hard enough and you just don't give up, then you can achieve pretty much anything in life, all right? So look, thank you very much. I'm going to give this a go before I start waffling on to you and getting all thingy. I'm not the philosophy or the psychologist. Don't listen to that from me. Get yourself over to your NLP coach, which is Jimmy, and he will do all of that for you. But wishing you all a fantastic weekend. I'm going to be live next Monday and Wednesday back on my live stream. Hope to catch some of you over there. Again, if you've got anything, then please do pop over. Come and drop me a line. If you want to see some alts reviewed next week, if you want to see some live trading sessions, we'll get the 1 minute chart out. We'll target the London crossover with the New York Open, and let's do some scalping. All right, we're going to bring that next week, which my good dear friend Basebo will be absolutely thrilled about. So big shout out to you all again. Thank you very much. Spiegel, absolutely lovely of you to say, mate. Thank you very much. And yeah, please do drop by, come and say hi on Twitter, and drop by and see us at the Nest. Have a fantastic week, everyone. Spiegel, Consti, Jojo, Ed, Joan, absolutely everybody. I'm really sorry if I missed anyone out. Aromatic Genetics, what an awesome name. And Crypto YM, Mouser, Consti, all legends, Basebo, everybody that's been on the stream, say thank you so much. Have an amazing weekend. I look forward to catching you all around the Nest and out on social media. Take care.